Taxes can seem like a labyrinth, filled with twists, turns, and dead ends. Understanding the intricacies of tax obligations is vital for small businesses. It's not just about compliance, it's about savvy financial management. Neglecting this duty might lead to penalties, or worse, a collapsing business. Stay tuned to find out how to turn this taxing task into a manageable process. If you're new to New Way Finance Academy, subscribe and turn on the notification bell so you can be notified whenever we post a new video. The first step in managing your taxes: keeping accurate records. Now, this may sound like an intimidating task, but don't fret. It's all about understanding what to keep, how long to keep it, and the benefits that come along with it. So let's start with what to keep. It's essential to hold on to all invoices, receipts, bank statements, payroll documents, and any other records that reflect your income and expenses. This includes both hard copies and digital files. It's like creating a vivid map of your financial journey, one that you can refer back to at any time. Now, you might be wondering, how long should I keep all these records? Well, the general rule of thumb is to keep your records for at least 7 years. This is because the taxman can ask to see records from up to 7 years ago. If you can't provide them, you may face penalties. And trust me, those are a headache you don't need. Now, on to the benefits. Accurate record keeping simplifies tax filing. With all your records at your fingertips, you can easily determine your taxable income, calculate your tax liability, identify deductions, and even spot potential tax-saving opportunities. Simply put, it's like having a clear roadmap in the tax maze. But there's more. Good record keeping can also help you avoid potential tax penalties. By maintaining accurate records, you're less likely to make errors on your tax return that could trigger an audit. And if an audit does occur, your well-kept records will be your best defense. Plus, good record keeping isn't just beneficial for taxes. It's also crucial for making informed business decisions. It provides you a clear snapshot of your financial health, helping you identify trends, track progress, and plan for the future. It's like having a financial crystal ball. In short, accurate record keeping is a powerful tool that can simplify your life, boost your business, and yes, make tax time a whole lot easier. Remember, good record keeping is your first defense against tax complications. Did you know that tax deductions could be your best friends in reducing your tax bill? Yes, you heard it right. These deductions can significantly lighten your tax load if you know how to leverage them properly. Firstly, let's talk about the home office deduction. If you're running your business from your home, a portion of your rent or mortgage, along with utilities, can be deducted. But remember, this space must be exclusively and regularly used for business. No claiming the kitchen table where you also eat your spaghetti. Next up, travel expenses. If you're traveling for business, your transportation, lodging, and 50% of your meals can be deducted. But be careful here. Your trip needs to be primarily for business. That family vacation to Disneyland with a single business meeting doesn't quite count. And what about equipment expenses? You can deduct the cost of computers, office furniture, software, and other business equipment. However, you might need to depreciate these expenses over several years, depending on the cost and lifespan of the equipment. Now, you might be thinking, how do I claim these deductions? Well, the key is to keep detailed records. Track every expense, keep your receipts, and annotate their business purpose. And yes, there are apps that can help with that. Also, it's important to understand the difference between a business expense and a personal one. This can be a bit tricky, especially for home-based businesses. In general, an expense is considered business-related if it is both ordinary and necessary for your business operations. Let's not forget about self-employment taxes. If you're self-employed, you're responsible for both the employer and employee portions of Social Security and Medicare taxes. But here's the good news. You can deduct the employer portion of these taxes. Lastly, it's always a good idea to consult with a tax professional. They can provide you with personalized advice and ensure you're maximizing your deductions while staying within the legal boundaries. So, don't shy away from deductions. Embrace them, for they're your tax-saving friends. Why wait for year-end tax headaches when you can deal with them quarterly? Let's talk about a concept that might be new to some: quarterly estimated taxes. This is a system where instead of waiting for the end of the year to pay your taxes in one lump sum, you make estimated tax payments throughout the year. Just like it sounds, you estimate what you owe and pay it in 4 equal installments. Now you might be wondering, who should be paying these quarterly estimated taxes? The answer is anyone who has income that isn't subject to withholding. This could mean independent contractors, sole proprietors, partners in a partnership, or even those with significant investment income. Essentially, if you're a small business owner, this is something you should be considering. Why, you ask? Well, there are several benefits to this approach. Firstly, it helps ensure you're not hit with a hefty tax bill at the end of the year. Imagine it's December, you're buying holiday gifts, planning end-of-year festivities, and suddenly you're hit with a large tax bill. Not the best scenario, right? Secondly, it can help you avoid potential penalties for underpayment. If you don't pay enough tax throughout the year, either through withholding or estimated tax payments, you may have to pay a penalty. So by making these quarterly payments, you're essentially safeguarding yourself. And lastly, it's all about cash flow. Spreading out your tax payments can help manage your cash flow more effectively. Instead of having to come up with a large sum of money at once, you can plan and budget for these payments throughout the year. So if you're a small business owner, consider making these quarterly estimated tax payments. It might seem like a bit more work, but the peace of mind it can provide is well worth it. So spread out your tax obligations over the year and give yourself a break. Are you thinking that hiring a tax professional is an unnecessary expense? Think again. The truth of the matter is, engaging a tax professional is an investment, not an expense. Let's delve into why that is. Firstly, the world of taxation is complex and constantly evolving. With new laws and regulations introduced regularly, it's a Herculean task to stay on top of it all. A tax professional lives and breathes these changes, ensuring your business remains compliant and you worry-free. Secondly, a tax professional can identify potential tax savings that you may overlook. These savings can often offset the cost of their services. Consider this: you don't know what you don't know. There could be deductions or credits you're eligible for but aren't aware of. A tax professional with their extensive knowledge and experience can bring these to light, helping you optimize your tax situation. Beyond savings and compliance, hiring a tax professional can save you time and effort, allowing you to focus on what you do best: running your business. Picture this. Instead of wading through piles of receipts and tax forms, you could be strategizing your next business move or simply spending quality time with your loved ones. Now, when it comes to choosing a tax professional, you'll want someone who not only understands tax laws, but also understands your business and industry. Look for professionals who are certified, experienced, and come with positive reviews. Don't be shy to ask for references or conduct an interview before making your decision. Also, bear in mind that the best tax professionals are often booked up well before tax season, so it's worth starting your search early and investing the time to find the right fit for your business. In conclusion, hiring a tax professional is not an expense but an investment in your business's financial health. They bring invaluable expertise to the table, helping your business navigate the complex world of taxation, uncover potential savings, and free up your time. Remember, a tax professional is an investment in your business's financial health, not an expense. Now that you're equipped with these tax tips, it's time to be tax smart, not hard. We've navigated the tax maze together, and you've seen how essential it is to keep accurate and timely records. It's not just about staying organized, it's about having the necessary information at your fingertips when you need it. This will not only save you time, but also stress. We've also highlighted the importance of maximizing your tax deductions. Remember, every dollar you can rightfully deduct is a dollar saved. Be meticulous about tracking your expenses and understand what qualifies as a deductible expense for your business. Furthermore, we've underscored the significance of paying your estimated taxes quarterly. Don't wait for year-end to get hit with a massive tax bill. Paying quarterly can help you manage your cash flow better and avoid penalties for underpayment. And lastly, we've discussed the value of hiring a tax professional. This is an investment that can save you money in the long run. These experts can provide the guidance you need to navigate complex tax laws, and they can help you maximize your savings. So take these tips to heart and turn the taxing task of taxes into a manageable process. Remember to like, subscribe, and turn on notifications for more such informative videos. Thank you for watching.